Good morning. Let's have a quick look at the signals that are of interest at the moment. Iluka up on screen here. The stock's been making higher highs and higher lows over the last 12 months. And the recent pullback here to around this 930 is seeing a strong push off that support line. I think short-term traders can think about owning Iluka and running a stop either below the uptrending support line or below that horizontal support there at 930. Another stock that we quite like at the moment is Link Administration Services. So this is similar to a computer share style business. A number of analysts have a $10 price target on this stock. We had the Algo signal back here at 730, rallied up, made a high, retraced back, consolidated. And it looks like it's wanting to push much higher off this level at the moment. Cochlear, where we had a signal last week. Let's have a quick look at that chart. I think sort of this support level at 160, these higher low formations have held well in the past, and I think long exposure with a stop below that is something that can be considered. For investment portfolios, I think Insurance Australia Group coming into the upcoming earnings result and dividend. We had Algo buy signal back here. And I think at around this $7 level, the stock looks to be making a foundation for a push higher. ASX. A similar thing coming into the upcoming dividend. We're under strong buy conditions here at the moment. The stock continues to make higher highs and higher lows. And I think this is an opportunity to buy this ahead of the result. They're paying over $1 dividend, and that's fully franked. Origin, I think this trades higher. I think out of probably all the energy named, when you look across Santos, Woodside, Oil Search, I actually think Origin's probably got more left in it, whereas the others are looking full value. I think Origin could take out this high and maybe trade back up to 10.50. Aristocrat Leisure, I think this is really just a momentum play, but I think this one should be one that you're keeping an eye on. Again, higher low structure there at 22. I think the upcoming earnings result and the commentary out of the company should be quite supportive. I think sort of Amcor, you're starting to see value deliver here. Now, what's been working against Amcor is the high Aussie dollar and the input costs for Amcor's packaging products, so resins and the like, are trading up near all-time highs. So when I refer to the input cost, the cost of the products, the cost of the raw goods that go into creating the products. So there's a bit of a perfect storm around Amcor at the moment, and we'll look for some positivity out of the upcoming earnings result. But I think sort of whether it bottoms out here or at 14.25, or I just think you want to be keeping Amcor on your radar, as there's certainly a opportunity there from more of a medium to longer term perspective. I think the stock's good value. I think AMP could surprise, so I've just added this one into the list. I think coming into their earnings result, so we'll have a look at that more over the coming days and provide commentary on the blog. Just picking up on this resource theme that still may have a little bit more left in it. South 32, I think you need to run tight stop losses on this, but you may get another 2 or 3 days push higher into that, but you could think about owning it and placing stops below 370. And Lend-Lease, this is more for investor portfolios, and I'd probably be wanting to add a covered call at around the 16.50 level there in Lend-Lease. So there's just a few names on the short side. The ones that have caught my attention this morning are Harvey Norman. Now, we've seen the stock roll over. It's rallied back, found resistance at sort of that old support level there. We've had a bunch of the sell side signals. And the stock's back up against this resistance again at the moment. So I think sort of if you look at the short side of Harvey Norman and run a stop above, say, this 455 level, I think that's a trade that's worth looking at as well. Likewise, A2 Milk. This stock's done very well off the back of Bellamy's results being better than expected. But from a PE standpoint, I'm starting to get concerned that it's trading on an unsustainable multiple. And, if you're looking, so for CFD clients that are looking for, a short-term trade, you do need to be running tight stops because clearly the momentum's very bullish, and trying to sort of pick at what day it rolls over is going to be difficult. But, selling it here and running a stop above the high, you might have 2 or 3 goes at getting set in it before it eventually rolls over. On the investor portfolio, as far as buy rights go, I like Sonic Healthcare, and we'll be looking at adding buy rights over this one today. I think Sydney Airports, obviously the yield names are under pressure at the moment from higher bond yields, and you're seeing property trusts in particular, again, softer today. But Sydney Airports, buying this and selling a $7 call option, I think is something, or $7.25. And the other one that I feel sort of probably just moves sideways is Woolworths, and you're getting 100% franked dividend here. But, I think sort of buying it and selling, say, the $7.50 covered call and stripping out the upcoming dividend. If you'd like to look at any of these strategies, please give the office a call on 1300 614 002. Thanks for listening in.